Okay, we need to talk about one of the most incredible stories to hit the financial markets in years. I'm talking about the insane, record smashing surge in the price of silver. How on earth did it happen? And more importantly, was this just a wild speculative bubble? Or was it a serious warning shot of something much, much bigger on the horizon? Let's get into it. So, picture this. It's December 29th, 2025, and the market is just stunned. After 5 straight days of climbing, the price of silver explodes to a historic all-time high of $84 an ounce, a price that, frankly, almost nobody saw coming. It completely shattered every previous record. Of course, the experts immediately started weighing in. Market analyst Tony Sycamore called it a generational bubble. And I want you to just think about that phrase for a second. He's not just saying it's a normal up and down. He's saying this is a once-in-a-generation event, something we're going to be talking about for years and years. So how did we even get to that point? And just as important, what happened right after? Let's break down this absolutely wild ride for the white metal. The speed of this move was just staggering. The climb to that record high was unbelievably steep. But as they say, what goes up that fast often comes down just as quickly. And that's exactly what happened. Almost the second it hit $84, traders started cashing in, taking their profits, and sending the price tumbling right back down in a really sharp correction. Now, to really understand silver's crazy spike, we kind of have to zoom out a little bit. This wasn't happening in a vacuum. The entire year was basically setting the stage for a massive rally in all precious metals. The whole thing started with a perfect setup. First, the U.S. Federal Reserve cut interest rates. Not once, not twice, but 3 times. Now, when rates are lower, holding something like silver or gold, which doesn't pay you any interest, suddenly looks a whole lot more attractive. And what did that do? Well, it weakened the U.S. dollar, which just poured more fuel on the fire, making precious metals an even bigger magnet for investors looking for a safe place to put their money. And on top of all that, you had this perfect storm of other things brewing. Geopolitical tensions were flaring up in places like Venezuela and Nigeria, which always makes people nervous and pushes them towards safe haven assets. You had central banks buying up metals like crazy, and investors were just pouring money into things like ETFs. And to top it all off, the Bloomberg Dollar Index took its biggest weekly dive since June. It was a massive, massive tailwind. But here's the thing. Even with all those factors boosting gold and silver, silver's rally was just different. It completely outshined gold's. So why? Well, it's because the silver market has this unique, really volatile characteristic, a structural imbalance that was sparking an all-out scramble for the physical metal. So at the very heart of this story is something called a structural imbalance. Now, this isn't just about what traders are thinking day to day. This is a fundamental, real-world mismatch where the world simply needs more silver than it can easily get its hands on. And when that happens, well, things can get pretty wild pretty fast. To really get a handle on this squeeze, think of it this way. The gold market is like a deep ocean. It's vast, it's massive, there are huge reserves that keep it pretty stable. The silver market, though, it's more like a shallow river. It's a much thinner market, and it doesn't have a big central reserve to fall back on. So when a sudden rush of demand comes in, it doesn't take much to cause a giant price surge. And the proof was right there in the numbers. At the absolute peak of this frenzy, buyers were willing to pay a 7% premium just to get physical silver in their hands right away instead of waiting a year. That is a huge sign of desperation in the market. It shows you just how tight things had become. And this wasn't just some theoretical problem on a trading screen. No, this squeeze was having real-world effects. We started seeing global shortages pop up. For instance, silver inventories in the big warehouses in Shanghai fell to their lowest levels in a decade. The actual physical metal was literally disappearing. And this is where the story takes an even more serious turn. Because you see, unlike gold, which is mostly a financial asset, silver has a critical day job. It's an absolutely vital component in some of our most important, cutting-edge industries. Just think about it for a second. Silver is essential for solar panels. It's essential for the massive data centers that power the whole AI revolution. And it's in countless electronics that we all use every single day. There's a reason it's classified as a critical mineral. A major supply shortage here doesn't just hurt investors. It actually threatens to disrupt multiple vital global industries. Even Elon Musk chimed in on this. He saw the news about the supply shortage and posted on X with a very simple, very direct statement, "This is not good." When a guy who's at the forefront of so many of these industries says he's concerned, you know the situation is getting serious.
So let's bring this all back together. The price crashed from that $84 peak, but what does it all really mean? Was this just a speculative bubble that got way out of hand, or was it a flashing red warning sign of a much deeper problem?
Well, from a pure trading perspective, the rally had just gone too far, too fast. There's a key momentum indicator that traders watch called the RSI, or Relative Strength Index. It hit a reading of almost 80. Now, for traders, anything above 70 is a huge signal that an asset is overbought and that a pullback is probably coming. That signal was basically the trigger for a massive wave of profit taking that caused the price to correct.
And that leaves us with the final and most important question. The short-term speculative bubble? Yeah, that may have popped for now, but the underlying issue? That structural imbalance between skyrocketing industrial demand and a really tight physical supply, that hasn't gone anywhere. So was this wild ride just a temporary craze? Or was it the very first major warning shot of a silver supply crisis that is only just beginning?